Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil.
Paris rapeseed. The wide dark blue channel, currently 473.5 to 534 even, had seemingly been the main pattern here over spring and summer, eventually leading to a sloppy looking late April to early August head and shoulders top. However, the market did not fulfill the potential on the downside for this pattern during August, having been stripped quite a bit of its bearish incentive by the support of the slowly rising long moving average, currently at 460 3/4, and finally rejected by the support of the 50% absolute Fibonacci line at 445.5. Now, this rejection did not happen all at once, but during most of August and into the first half of September. And in the process, prices formed a very pretty, well, not very pretty actually, a not very pretty looking reverse head and shoulders pattern with a fairly flat, bright red neckline on my daily chart, and that's currently at 476 1/4. 2 weeks ago, prices broke higher over the bright red neckline, as well as over the mauve flatlining medium moving average, currently at 477.5, stabilizing over both of these for about a week before last week, and also this week, moving higher, initially with higher highs, but more recently with higher lows as well. Last week, I laid out the following: a primary topside target X overhead for the reverse head and shoulders pattern in the 496 even area, the secondary harder to reach target X1 up in the 504 1/4 area. This week, prices reached target X, pushing up and trying to stabilize over the July 2021 low at 497.5. Now, the following is a feature I described last week, which is developing and possibly morphing into another feature. So, I said last week, and I quote, "There is one other feature I would like to highlight, though at this time I'm not sure if it is very relevant, so it's more like just be aware type situation. It is a construction of a possible mid-August to date rising expanding wedge pattern, and that's currently now 463 3/4 to 498.5. I've not highlighted it on my daily chart as I am not sure of the weighting I should give it, but it is something just to be aware." End of quote. This week, prices are testing the upper trend line, but there is also now the possibility that this expanding wedge pattern, still unhighlighted on my daily chart, I hasten to add, may be morphing into a late September to date quite acute bull channel, also not highlighted at this time, but it's currently 486 even to 505 even. This development is one to watch, as it could be the avenue by which the market rises up to reach target X1. Needless to say, it also raises question as to whether or not the original dark blue May to date bull channel may have repaired itself after being broken. Winnipeg canola. The main pattern here, until 2 weeks ago, had been a twofold pattern, plus the various moving averages messing with the market. The first pattern was the obvious late May to late June bearish Andrews picture, which had captured the market sort of until the end of September, and now is redundant enough that I will retire it after today. The second pattern has been, and I suppose still is, the insidious, I suppose, purple highlighted neckline extension to the April to June reverse head and shoulders continuation pattern, as currently at 609 even. That had, and maybe still does, act as a bearish median line since last year. The market has moved up over it these past 2 weeks, but not too far away from it for it to have lost its influence as yet. During this time, the moving averages have acted as a support, as a resistance, and as a nuisance. Right now, the market is being schizophrenic. Using the combination of the slowly declining gold long moving average, currently at 627.10, and the mauve medium moving average, currently 628.10, as both a support and a resistance over the last 2 and a bit weeks, all at the same time. It has been clearer with the green short medium moving average, currently 607.70 below, acting as a support. However, these are not the only features that I wish to draw your attention to. You see, the activity over late July today has also created a quite lopsided double bottom pattern. And last week, we were trying to break above the neckline, which approximately equates to the 2021 low at 629.60. Now, as I said last week, and I quote, I'd normally wait a little while for a confirmation for this move higher, but I'm tempted with what I've seen in the other markets to lay out some potential targets topside right now. Thus, the primary target X would be in the 671.80 area, for secondary harder to reach target X1 up in the 688.10 area. These, of course, presupposes that what I see right now as a double bottom does not become in due course a bearish cat's ears pattern. End of quote. Now, for now, I will stick with this idea of a double bottom, but it is a big but I am keeping a careful eye on the very recent activity, especially on any turn down in prices that might create a bearish cat's ears pattern. Burst of Malaysia crude palm oil. I said last week, and I quote, of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April. End of quote. Okay, so the first of these patterns is the bright red broken upper tine, currently at 37.27 of the August to November 2022 bearish shift pitchfork. This has acted as a declining support throughout late spring and summer. The second is the green neckline, currently at 42.57 of the September to November 2023 reverse head and shoulders pattern. Finally, and thirdly, I'd also possibly add the dark blue neckline, currently at 43.62 of the September 2015 to November 2017 head and shoulders top, though I am really not sure about this one. Anyway, the green neckline and the bright red broken upper tine have sort of caused the market to form a mid-April to date expanding wedge pattern, of which we last week saw a break higher, and this week seemingly stabilization over right on this neckline. I'd like to give the market one more week, let's say, stabilizing, maybe more, but one more week, stabilizing over this neckline before I start looking at potential topside targets for what will be a very big move higher, if it comes about. I'm also watching market action on and around the dark blue neckline to see if it really is an influence, as it was back in March and April. Thus, more on all of this in future editions. Now, one final point, and it has been a somewhat contrary point, but a point I've been stressing now for 29 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now? Well, for this I went to my standby on such occasions, the longer-term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high of 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level." End of quote. It seems obvious to me, at least, that I should still consider monitoring the 44.08 level, not only because it is a longer term play, but also to see if its influence could be felt in the very recent action. We have seen this week, and possibly in weeks to come, that action. We are now closer to that level, 44.08, than we have been since early April.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.